Hey everyone, it's Zach with Palantir Research. We've got a big week right before earnings, Palantir winning deals, showing up big headlines, links, and interviews all throughout the week to cover. And I'll also be adding on some earnings preview thoughts that I haven't covered in previous videos yet. So looking at the stock briefly first, we look to be up only around a couple percent as of Friday's close, and we've pretty much been whistling between the $16 and $17 range. So we started the news week off with Cathie Wood and Ether Square, just letting everyone know there's been active links for a few weeks there for ARK, indicating that they've probably had some form of access to Palantir's products. Now remember, it's still speculation here, not confirmed or anything official, but interesting to see how they could leverage this and if it's possible for them to actually see returns because of it. Then we also took the chance to cover some investor questions that are top voted, and you can reference that daily video for my detailed thoughts, but essentially a lot of it has to deal with the theme of investors getting clarity around growth and how they'll exactly do that and get it done. We, of course, can't forget the silly dividend question that keeps popping up every time here, and I don't actually know why it's voted up so high, but either way, we'll see if Palantir addresses these, and I know for sure it is to see what's going to happen in the short and long term, and then the growth drivers there and what management expects to do into the new year. And then we kind of got this under the radar news too with Builder Chain. Thanks again to Lord Grimm for posting this, but there was this trailer and website that essentially says this organization will power the solution with Palantir. Now, specifically, this goes into blockchain and management side of construction, but there is a heavy emphasis around the ontology and being able to actually understand the full picture here if you're working in that field. So if you've checked out the videos, I know some of you may recognize the voice, but the team page is still blank here for me, so I don't want to speculate on people's roles on this project. Then we've got some more negative analyst news. I covered Jeffrey's $13 price target, sell rating, and reiteration from Brent Dill, but also alongside him, we've got the reiteration from RBC with their $5 price target, and then Citi. So how convenient leading up to earnings here, but essentially they provide no new information and give the easy overvaluation case here. So it's not like you can knock them for that, I guess. But I mean, yeah, anyone can point to their numbers and see it's a high ratio and say it'll be more growth than they've ever seen before. So obviously they'll have to prove it, but there's also a reason for the built-in expectations and premium that people are willing to buy it for. So I'll let you individual investors duke it out, but we all know the stories of over and undervalued companies throughout time. So we'll just see what happens. Then we continue to get interviews from Joe Lanzio, really pushing the story of AI, especially on the military and political side. Be sure to check those out. They actually gave him a decent amount of time here on Yahoo Finance at around 9 minutes, and does talk a bit about Anduril though for those who are interested in the company, and they were founded by ex-Palantir employees, just so you know. And then alongside this, there's a new demo that just came out from the crowd favorite Chad on the Ontology SDK. This is related to the blog post from a couple weeks back on January 22nd on the same subject, so just be sure to check it out on the Palantir's developer channel if you're curious. And then we've also got a look at institutional ownership here leading up to the earnings. Right now, just note we are still in the middle of 13F season, but we do see some stabilization in the percentage ownership of outstanding shares around 40%, and still seeing net buyers from existing people who hold Palantir. But amongst new and sold out positions, we are pretty much even in the amount of shares. So the most intriguing part though, I would say, is the buys and some of the percentages increase, with some 6xing or 8xing their holdings of Palantir from before, at least from the previous 13F filings. And then while as of 12/31/2023 positions, ARK is still the biggest buyer here at this point, so we'll continue to monitor if anyone pops up. And then the biggest news is this new international commercial client here out from Australia, Coles. This is a very consumer-facing brand, as they have over 840 supermarkets across Australia and apparently share a 70% market share in the country with another major retailer, Woolworth. So it's locked in for a 3-year contract, but we don't have any dollar amount here yet. But as suspected, we get the typical use cases for an enterprise like this: supply chains, employee management, as well as customer and employee satisfaction that goes on in this whole picture. Palantir has already been doing supply chain work across multiple industries and has worked in Australia before with other clients in different industries. So albeit this is technically the first Australian retailer that they're working for, and it's also good news for us that they are publicly traded, so information can be available, and maybe over time in future quarters we hear any reference of Palantir helping them would be a major event. And just from 2023 alone, just for reference, they had around $40 billion in revenue, and that's on the size of their business here. And interesting folks too, we're bringing up an old post from 2019, and it was a press release with Coles and then Microsoft working together. Some of these very similar use cases here, and they pointed out the overlap. Like there may have been a failure possibly to take off or reach its goals, but that's just speculation. And even if they are continuing to use Microsoft and all the things that they've already built with that partnership from before, it's quite telling to me, at least for Coles, that they're starting to work with Palantir despite any previous efforts. Now, we'll stay tuned if they can actually generate the value that they're expecting from Palantir's products, and hopefully so. So earnings preview, what am I thinking? Well, we already know the obvious stuff, and you can see my previous video videos for that stuff, like customer accounts priority, the AIP bootcamp performance, as well as the conversions there and the speed of conversions and all that good stuff, which will for sure move the stock depending on how management presents the progress of these. But I haven't really talked about their cash and why I'm starting to think about them getting at least a little bit more creative with it. Now, disclaimer first. If management sees no good ROI on this cash hoard here of $3.3 billion and probably bigger when earnings comes out, then I'm still perfectly fine with them sitting on it and accumulating this, and of course being in the short-term treasuries in the meantime. We know Powell and the recent jobs report might push any idea of a rate cut later into the year, meaning treasuries might be a quick second breath here, meaning cash is still okay to sit on it. But thinking about the longer term trajectory of Palantir, I'm getting a stronger feeling at least now that this can be put to use in a way that can grow their customer counts and top line revenue numbers more and more, or at least in a longer term perspective. And it goes without saying too, to keep the obvious spending on product development and streamline SG&A just to keep the company going on, but also ensuring there's at least always something in the pipeline, especially while we're in this AI arms race against much bigger cash and resource piles from big tech. But also, I'm not saying to just throw this into the buybacks, which there is $1 billion set aside, but probably wouldn't be used in the near term, in my opinion, unless we get to a ridiculousness in price action. Now, in spirit, saying you have money for a buyback is good enough for me, and if they never get to a point to spend it, that's fine also. But one thing I'd be curious from Palantir is with the acceleration of these boot camps, if they threw more money at it, would they get outsized returns from this, like training more FDEs to run this? Because at least from the pictures, these boot camps appear to comprise of multiple organizations, meaning there's a multiplying factor here, right? For every one FDE, they can say run a couple boot camps in a month with 5 to 10 orgs. And as long as the demand is there filling these up, if we supercharge the amount of FDEs after they're up to speed, then that ratio hopefully is maintained here. It's just a thought though that comes across, and maybe they're already implementing something else like this, or maybe they've thought about it. But also we've seen FedStart slowly start to get more and more companies trying them out and allowing them into the business side here with the government. I wonder if Palantir can do something similar at the commercial level. Now in healthcare, we know they do extensive work, and that goes without saying. There's probably a ton of PHI they handle and deal with. While in my line of work, there is something called high trust. It comprises of not only technology, but also business processes, controls, and lines of communication that need to be there to be considered and then obtain high trust at an organization. And a lot of customers like to have their vendors have this. But for startups, this is obviously difficult to do or just more intensive. So at least maybe on the technical side, I wonder if Palantir can provide something similar, which is getting onto this framework or platform that they can put together similar to a FedStart. But as a company, you still do you, but operate within the sphere and that your customers know you're secure and have high trust. And I'm just spitballing here, obviously, but it's another idea that they've already built out on the government contracting world. So it doesn't seem impossible on this end to maybe apply it to another industry. Now, cash can also be used in many other creative ways besides the simple examples of just getting more people or just making a new product. Now, folks do talk about acquisitions. I'm not fully aligned with this kind of boat, especially just recently going through one myself at where I work, but it definitely adds more administrative burdens if you're trying to integrate another organization. But there's a caveat here. If you're saying that you're just buying out the technology and patents of a company and their clients, then maybe I'd consider that so. It's just, of course, the ease of integration there and making sure it's all fine and dandy and no issues with regulations. But these can be tricky where you don't want it to end up slowing down Palantir dealing with this scenario, where the focus should still be on growing their platform and customers and users. And maybe organically is just the best way to do that. So going into earnings, I'll be interested to hear during their earnings call if there are any different ways they're going to deploy their cash, or if they'll just continue to think about it and sit pretty on the treasure trove. But I'm curious to know your thoughts on their cash, and maybe I'm just getting a bit antsy with it around. But let me know your thoughts, and I'll see you in the next video.